Do we believe that our government will all of a sudden make it easier for people to get power contracts across an approval layer that is both federal, state, and county? No, no. I have zero faith. All right, I think we'll get started. I assume more people can join. Obviously, the chat is live, but I just want to thank everybody for joining this live episode of The Circuit. Obviously, those listening to this on the audio recording next week, it's a little you're not live, but thank you for listening anyway. Anyway, this is The Circuit. My name is Ben Bajarin. Thanks for joining.
Hi, I'm Jay Goldberg.
And we are here with Paul Karazuba from the GSA. I'll let you describe the GSA. Most people obviously here on this list know what the GSA is, and then we'll jump into our topics.
Sure. So thanks again for having me. Second time here on the podcast. Always a pleasure to be here with you guys. So Expedera, my company, is a member of the Global Semiconductor Alliance. The GSA encompasses semiconductor software solutions, system and services. It's a global organization, 300 corporate members, 120 of those are public companies. Notably, it's a unique, neutral platform for collaboration. 84% or so of the semiconductor industry is part of the GSA. And specifically within the GSA, Expedera works on the Emerging Technologies Group. We're tasked with essentially talking about what's next in the semiconductor industry. And the MTech Group includes Expedera, Microsoft, Amazon, Infineon, ARM, Renaissance, and Accenture. And thanks for having us here. We thought it would be a great idea for the circuit and the GSA to come together, especially because maybe not everyone within the GSA and everyone listening here is knowledgeable of your podcast, and they really should be. I personally find it to be one of the best sources of information that I get about the semiconductor industry on a weekly basis. So I'll beat you to the punch. If you're not subscribed, you should click and subscribe to this podcast.
Thank you, Paul. We obviously agree. We like our podcast. I know people sort of wanted us to do this anyway, as Jay has said, but since there might be people here listening for the first time across the board, I'll just give a little bit background on myself. My name is Ben Bajarin. I'm the CEO of a company called Creative Strategies, which has been an analyst firm in the Valley since 1969. I took over as a CEO maybe 6-7 years ago. I have a background in semiconductors, and semis was the first thing I covered starting in 2000. So I've been through a lot of cycles, a lot of good cycles, and have tracked semis for now more than 25 years.
Hi, I'm Jay Goldberg. I wear many hats. Today I'm wearing a Montana State Bobcats hat. I'm an equity analyst. I'm currently at a firm called Seaport. I do a newsletter called Digits to Dollars. A long time ago, some of you may know me when I was at Deutsche Bank, and I wrote another newsletter called Signals to Noise. I'm also an investor at Century Capital.
Cool. All right, so let's kick this off. There's a hot and timely subject today around tariffs, and it's interesting. We my firm does a lot of consulting with a lot of people in the semiconductor industry, but also in devices, and so this has been a state of contention coming into the supply chain. Really, like, how do you manage your supply chain? How do you have not just diversity, but what can you do right in terms of managing tariffs? And what I think is interesting, and what we'll talk about throughout really this whole podcast, right, is just some of the constraints the industry is seeing, some of the reasons why that's happening across every vector from manufacturing to distribution and compute, memory, et cetera. But also the inflection points that we're seeing that are driving just incredible and unprecedented growth for the semiconductor. And so, I had thought about this coming into tariffs where, even toward the end of the year, I was looking at this saying, like this is a compounded problem on tariffs that nobody really kind of thought about right a year or more so ago when tariffs started coming up. And so it was sort of just one other thing they got hit with, right? It wasn't just the here it is, like now you got to manage supply chain. It's like now you actually got to deal with managing supply chain and tariffs and absurd rising costs. In fact, I think everybody here has I think probably well been aware of the historic stat of when will the semiconductor industry hit $1 trillion. And prior to last year, it was 2030. And now we have people saying, that could reasonably happen this year. But what makes this shocking to me is that it's not a massive inflection in unit shipments, it's ASP. And if you look back at historically, right, the semiconductor ASP has been below 50 cents for a long period of time. I think it was up into the 60s. And now we're actually talking about, by the time we get to 2030, it could be mid-dollar, maybe even $2, which is just insane, which again is not because we're just drastically all of a sudden shipping more semiconductors. It's that things like memory and compute, right, core parts of logic, which now take up decent shipments, and storage to that degree, are just seeing the next couple of years in incredible, cost rises. So I look at this sort of as, I expect many of my conversations with the supply chain to be like, hey, not only one, might we get our money back, but two, this might help us figure out like how we're going to absorb this now increased of memory. So we'll just sort of jump off with this topic on tariffs. Do we think it sticks? I mean, I'm not a government person, so I don't know if they have anything they can do to fight this. But we'll just sort of jump off there on the tariff conversation and at least what we can take right now, since it's fresh, as impacts to the industry.
Tariffs are bad.
Bad, Jay.
I'm going to start
Bad.
there. I'm going to start with the value judgment. Tariffs are bad. I'm not convinced they deliver the policy goals that the government would like them to. I'm not sure the government actually has any policy goals with them. But certainly for those of us in business, it's generally a negative. Now you could argue that a judicious use of tariffs in certain areas might be a good plan, but I think blanket tariffs in general on countries, it gets very confusing very quickly. What's in, what's out. The whole thing's a mess, and it just got messier today. But hopefully the tariffs go away. I think that from an economic standpoint, tariffs are a tax on consumers,
Yeah,
right? Which
agreed.
is not a great thing. Now, I think there is a legitimate case to be made that certain countries have given strong preferential treatment to their domestic industry at the expense of others, and I think that's a real, like, I don't know why I'm beating around the bush here. China has a lot of policies in place to benefit its manufacturing sector. I think the world, the United States, needs a response to that. I'm not convinced tariffs were going to get us there. We've certainly seen imports from China go up over the last few years, despite the tariffs. So goodbye tariffs. I will not miss you.
Yeah. And like I said, I think it's interesting where, again, we were already concerned about who was going to bear those costs, especially in consumer tech type of stuff in particular, right? Where you are a little bit more margin constrained, right? And who passes the burden of that. And again, my concern coming into this just, within the last few months was they got to deal with that. Who's going to pay just the tariff? Then they're going to have to deal with insane memory and storage costs. It's like who absorbs those margins? And it was interesting. There was some chatter this week from the Phison CEO, who was sort of out saying like, look, hey, I don't even think he even rolled tariffs into this. He was just saying the memory prices alone will probably kill a number of consumer electronics companies who just simply can't absorb, right? They were already working at near zero margins, and they can't absorb any margin hit. So again, that doesn't solve this particular problem. It's just, my point in general is there was already a double whammy, right, in a price hit from tariffs, and then now memory and storage. Hopefully that helps. I mean, we're going to talk about memory and storage in a little bit. I don't. It's not like all of a sudden we're like, hey, the smartphone industry or the PC industry is going to all of a sudden get better. Like it's probably not. But this might help alleviate some pain, I guess, is my broad point there.
Yeah, I think. I mean, the thing to remember is the tariffs are something that only United States people in the U.S. pay, consumers in the U.S. pay. The memory shortage is being felt by
global.
the entire
Yeah,
world.
that's right.
And so certainly in the US, it's a good thing. It'll should reduce costs for some things, but we still have to deal with memory.
So, whose job today is the most hectic? The CFO at a publicly traded semiconductor company or the purchasing person at the same company?
I
Oh,
mean, I still think the supply chain side's probably the worst because
Mhm.
like that's really the negotiations, right? I think you've come into this saying who's negotiating at volume, and I do think the other interesting side of this is the shift that's sort of happened, I guess, in the last few months where people really weren't in a position to stockpile a lot of inventory. And
Mhm.
so it's not like where somebody could just buy a 3 or 4 year cycles worth of memory or storage anymore, and a lot because you're actually seeing fundamental design differences where this stuff is being specced in, right? Not necessarily just bolted on after the fact, especially in high compute data center AI stuff. But just that whole nature where everybody's kind of at a negotiating table again, right? That
Mhm.
you don't have, you're not sitting on inventory where you're like, all right, I'm good for a while. It's like everybody's starting fresh,
Mhm.
negotiating now with new spot pricing right across the
Mhm.
board. So I think that's the first one, right? The CFO part, and Jake can maybe comment more on that. Is just it's like how like what are you going to do, right? How much can you afford? Like this comes into strategy of your pricing, your margin hit, your and that's unsettled. Like I don't know how that plays out.
I've been a CFO, and it being a CFO of a public company is incredibly hectic. But I will say in this situation today, the purchasing manager has the more hectic role
Mhm.
because they're going to get fired first. Right, that's what's going to happen. Is they're going to be running around, and everyone will be screaming at them internally, saying, "Hey, I need cheaper memory," and there's no options. And so when all the contracts for memory finally come in, that the purchasing guy gets fired, and
Mhm.
then a quarter or two later, the CFO gets fired because they're missing numbers. So purchasing manager by a nose because he or she gets fired first.
Yeah.
Makes sense.
Yeah.
It's all a
All right.
mess, is what I'm
We've
really saying.
we've yeah, we've got a hefty list of comments, and I think we do want to let people ask questions toward the second half of the hour. So let's sort of jump into it. If you're new again, like listening to this podcast, Jay and I have been talking about constraints across the industry, and really we frame this in light of what are the inflection points that we see, and so and in broad scoops, like I think this is actually really interesting at a meta level. So I'll make this point. Um, like not only do we have just this insane build out right of opportunity or across just capacity expansion that's needed, like just overall constraints in the industry, like that was happening regardless of these inflection points. The inflection points compound this issue even just so much more. And so it's sort of like if we were just looking at, hey, the world needed a bunch more ASICs and CPUs and some faster networking. Okay, like that alone is causing a multi-year capacity expansion demand. You move that to some of these inflection points that we're going to talk about, and I just don't know, to be honest with you. Like again, Ben's not a vampire, so I'm not like 100 years old or whatnot, but like I don't know if even going back to the early parts of the Industrial Revolution, we've had this simultaneous like massive expansion in terms of sort of a fundamental redesign of what's happening in the world of greenfield opportunity. Plus, that in itself is changing drastic, causing these inflection points. It's just, eh, I don't know. In a lot of ways, like I said, I was not alive for prior revolutions, but it feels fairly unprecedented because of the scale of this whole thing. But that's like I said, I just find that interesting at a high level.
I'm going to spend the next day digging through Wikipedia to find something that was more scarce. But I will say, I think what's interesting about this is the extent to which so many different parts of not just semis, but the broader industrial base are constrained
Yeah.
right now, right? Because obviously, leading edge capacity is constrained. GPUs are constrained. We're everybody's sold out. Networking, storage, memory, all sold out. If you look at you go down a layer, a lot of the semicap companies that supply equipment into the fabs themselves are constrained. They're at capacity. Um, uh, we were talking last week about copper. Copper is constrained, right? Uh, uh, Fiber is pretty close to being constrained. I mean, somebody the other day was telling me substrates are constrained. Like we're
Yep.
out of
Substrates.
substrates.
Absolutely.
Well, I mean,
Yep.
when was the last time any of us really gave a serious thought about substrates? Like it was, like normal plain substrates. And now we're running out of substrates. I mean, is that going to now lead to MSG shortages because the Ajinomoto is constrained too? I mean, like AI is causing a shortage in MSG. That's the headline I'm writing.
Yeah.
So, but I think it's also let's balance this too. One is everything's cyclical, so enjoy it while it lasts. It won't last forever, um, or grin and bear it. This will end someday, and things will get easier depending on which side of that shortage you're on. There are still a lot of things that are in excess capacity, right? There's an awful lot of trailing edge capacity out there, probably too much. There's a lot of analog capacity still, so uh, I don't know. It is definitely we're to your broader point though. We are seeing probably once in a generation shift, something that I don't think any of us have seen before like this, and probably we will hopefully never see it to this degree again.
So I think a lot of people on the podcast audience here might be wondering what's going to be the first sign that we are actually catching up. What's a leading indicator here?
Mm. I mean, I look at I've looked at this two ways, right? So you could use historical precedent of good enough, right? And so part of this I feel like is driven by the software cycle, right? In terms of their scale and really how fast it or how far ahead are the AI software frontier labs to compute, right? Because basically, as long as your agents are taking a half an hour to an hour. In fact, I did this poll on Twitter, I think last week, where I just said, look, if all things are equal and you're just going to have to always accept that your AI agent is never instantaneous, right? Not like a web page where you just go www and it's up, right? Or your app opens fast enough, right? Period points where good enough meant compute had caught up to software. If you assume that you're never going to have, and your agent be instantaneous, what's the minimum you're willing to wait? And basically, like the vast majority of people, came in at under 30 minutes, with the underside sentiment being like, it really depends on how much I expect a human to take this task. Like if this is going to take a human 2 days and it takes an hour, like I'm okay with that, right? Sure, I'd love it to be instant, but I get like I'm used to those. But most people aren't necessarily expecting this to be instantaneous. So I say that maybe it will, but to the degree that all of these agents are still consuming not just a lot of compute, but are still very slow and not just constrained, but very slow. I would say, my first's going to be, does compute catch up to the speed ramp at which AI software is running? Because my viewpoint there is like, okay, if it's, let's say, all agents at some point, like no matter what the frontier labs do, whatever new model, it never takes more than 5 minutes. Well, then what's the point of me buying a new ASIC next year or a new GPU next year? Like, I might upgrade my old hardware, but there's no driving need for me to spend that level of capex on new compute
Mhm.
when it's good enough. So that my first answer is, if we ever see good enough, but I don't know, does that happen early? Does that happen late? Like what? Like how late are you in the cycle? Do you see that before, right, it comes off?
Mhm.
I agree. It's driven heavily by software usage. I think where we'll see it first will be. I mean, let's just sort of rewind a little bit. We're talking about AI capex is driving all of this, as that's the spending of seven companies, seven, eight, depending on how you want to count it, are driving all of this, right? Probably even less, like five companies are really determining all of this. And so when they start to show signs of softness, I think that will be a pretty pronounced indicator. Now, we will probably see it in the supply chain before we hear it in their public comments. So if you say work at Broadcom or Nvidia and you hear that, I don't know, Amazon or Google is cutting their orders, and maybe that's just something happening to your product, but then you hear your husband works at SanDisk, um, and he says that same hyperscaler is cutting their order for next quarter. That's a pretty good indicator that something is afoot. And I think that more than anything else it's with driving the cycle down, and will probably drive the downturn when it comes. I would look to that end of the spectrum rather than to hear what sort of the semi-cap, the equipment makers or the fabs are saying. They won't see it first. We'll see it first in orders from the hyperscalers.
Yeah. Yeah. But let's back up too and just sort of get to kind of one of these inflection points, because what's interesting is as so long as the AI frontier labs like are constantly out here complaining that they don't have enough compute because they can't train models fast enough, they can't train the bigger models that they want, they can't push more intelligence right cycles into this. You're seeing architectural changes happen in obviously compute architecture and architecture at the data center level that sort of also creates this. It's not just like I build my infrastructure for data center 1 year. It's like even the next year I might have to change data center design. And a lot of that is, scale up, scale out, scale across, which I know there's varying degrees of this, but I sort of just now have mentally landed on, scale up is within the rack and within rack to rack. Scale out is when you're networking across a data center. So I got racks, 400 feet away, and I need to get them to the other 400 feet. That's scale. That's scale out, and then scale across. I think everybody agrees is data center to data center, which 100% will be a ton of new fiber laid to do that. But those inflection points of moving from one rack to now many racks as a GPU cluster or an ASIC cluster, and then now to many racks and many data centers as one compute cluster, which will be driven by that from primarily inference workloads, not necessarily training, is one of those inflection points that for at least the next handful of years, we'll see a host of architectural design changes need. Maybe not necessarily just ripping and replacing every year, but obviously moving to that, which a huge part of this, which I've been looking into lately, is what's the shift to 800 volt DC and the move then to support that with solid state transformers. So just the way data centers get power has to change with this inflection point as well, and all of that compounds again into complexities, into an interesting supply chain. Like I've brought this up before in our podcast. It's not just compute, it's energy, it's utilities, it's stuff that was not prepared for this either. Like we can't all Caterpillar can't all of a sudden go make more gas turbines. Like they're reliant on an industry that doesn't move fast either. So you just get all these fascinating bottlenecks. But yeah, this particular inflection point, like I said, feels like it's being driven by the speed to match or catch up or try to alleviate some of the pain in the AI frontier labs. And again, it just compounds these problems of constraints. Jay looks at me. Yeah. It's the normal constraint.
I sit through. I'm thinking through this, and one of the things that occurs to me is, we never know when the cycle turns. Like when you're working in the industry, you never know when the cycle turns until it's too late, right? Because when was the last time we had a conversation about double ordering, right? Right. Everybody on the call, I suspect, has experienced double orders before. Uh, are we seeing double orders right now? I can't tell, right? That's the tricky part about it is you have a customer that suddenly says, "Oh, last year we wanted 100 million in chips, and this year we want triple that. We want $300 million in chips or $300 million in product." Are they triple ordering, or are they just seeing what's that 400% growth? Um, Either of those could be true. There are companies out there that are growing, like Nebius and CoreWeave are growing revenue $400% year on year. Right? Applied Materials saw it's growing revenue at 20%. Like that hasn't happened in 20 years. Um, is there double ordering taking place? Yeah, right now that I'm sure there is, because that's a rational strategy, but it doesn't feel like it's going to affect us. It will
Yeah.
bite us eventually, but I don't think it's going to bite us. I don't want to guess when. It's just
I,
not right
I,
now.
but I get that too, and I like again, and I say this because the power one is super interesting to me. I just listened to both Veritiv and Eaton this week at different investor conferences, and like the Eaton CEO is basically like we're so backed up on colo shell data center builds, plus they're in liquid cooling also with their Boyd acquisition, so they're seeing right there's not just the shift from fans to liquid cooling, but also solid state transformers with 800-volt DC. And he was like, and I get projecting is hard. He was like, the bottlenecks that this will create and the demand is, he's like, this could go for at least 10 years. Now again, this is a company that is in the business of supplying material to those building these data centers. But that again, the capacity constraints that they're seeing, which again driven by this fundamental shift, which is many racks now being clustered together. We're going to move to these clusters. Like think about this. Like I was trying to validate this math because both the Eaton and Veritiv CEOs or technology guys pointed this out, that these rack clusters, so like a rack cluster of let's say 8 or 10 clustered together or bigger when we do fiber, which we'll talk about next, could drive a megawatt per rack cluster. A megawatt. So like you can't do that without 800 VDC. And on top of that, again, you need fundamental redesigns of the grid architecture in which to get there. And like that's just again a different constraint. So as Jay and I have sort of always said too, like the CapEx point I agree with, but to some degree, you wonder if a digestion cycle just has to happen because we can't build fast enough. And you just need to, and while I know that will look bad if they back off on CapEx, the reality is like if we're stuck at a grid level, if you can't convert that power right to energy, that contract to energy, I mean, that's not necessarily their fault. That's not us saying that demand is down. That's just we can't deal with the constraint at these fundamental levels. That's not right software or something that scales very easily.
Yeah, I agree with your points, but we're talking about layer 7 software, or even 800-volt physical layer 1. I think the real driving force here is going to be layer 0, which is money. And I do think I think you're 100% right. It's like we're going to get to a point where the constraints are so bad that things just have to. Everyone's going to start missing their numbers
Yeah,
because they just can't get their
exactly.
parts.
Exactly.
Um, and then who knows how that will sort of play
I,
through more broadly.
I mean, Jay knows, I'm an optimist. I'm always so like whenever I get a little bit cautious, Jay's like, hey, you're playing my role. But like, seriously, listening to the Eaton conference, like, I don't like these are serious constraints. Like these are not things that solve quickly. And like he gave me anxiety just listening to that call at whichever conference I forget it was. Again, even the Vertiv guys, I like they're dealing with like raw physical stuff. Not like, I mean, I get that making a wafer is a physical thing and making a GPU, but like they're literally they're talking about the supply chain for energification and the grid being insanely out of date. Like these are dude, these are things like and do we believe that our government will all of a sudden make it easier for people to get power contracts across an approval layer that is both federal, state, and county? No, no. I have zero faith, So it's like, anyway, I don't know, not to freak everybody out. I just like this is beyond, in a lot of ways, this is beyond the technology industry, and that's why back to my first sort of meta point, which is like, just think of the expansion that's happening, and then again, just to tie it back to the initial tariff conversation, it's like part of the tariff goal is like, well, let's just reindustrialize America. Guess what? AI data centers compute is actually reindustrializing America. So like you don't even need it. Like you need to help them build faster. Don't tax steel. Like let them build, because this is insane. And so it's happening for all the reasons that tariffs were never going to work, but tried to. Like we don't need them because we're literally white collar, like people are becoming electricians because like these people are going to be millionaires. Like plumbing, like every trade is off the charts because you don't have enough builders to build data centers. Anyway, I'm going to give myself more anxiety the more I think about all of the constraints. So we should jump to a different topic so I can become happier again.
I'll just make one point as you jump there. As you describe all this, it really feels like we're starting to reach peak Weyland-Yutani mode in the sci-fi world, where one company controls just about everything. We've gone from being, a semiconductor company. You're now a data center company where you're worried about utilities. You're worried about land. You're generating your own power. You're having to find your own water. It's a very different world now than it was maybe 10 years ago.
Yep. Yeah, agreed. All right. So the other one, inflection point, which is backing up on this scale up, scale out, scale across, is the shift from copper to fiber. We've been digging into this. We talked about the constraint. The stat I sort of threw out last week, just around copper, was that there's 2 miles of copper in one NVLink 72 Grace Blackwell rack. When you think of that, you're like that's an insane amount of wiring, which is getting even more complex. And then fiber is going to be even more insane with how many miles of fiber we're about to need, not just in a data center, but to connect data centers to data centers. And inference data centers will probably be 2 to 3x that of AI training data centers. And oh, by the way, those have not been built yet. So the optical stuff though is interesting because it's like in fact, my earliest photonics project was we were working with a company who put a photonics grid on top of a Palm PDA and was basically like, hey, we can detect your finger sensors through light where you touch on the screen, and it gives you better contrast so you're not dealing with that really ugly, filmy, touch screen with all those grids. And I remember like mind being blown because that was my first like spending a lot of time with silicon photonics and photonics engineers. And people, but they have always sort of talked about, yeah, like we're going to move data, around this, which we get, right? Fiber is obviously a system, like we use it today, but we're changing the complexity of really how much information and the interconnects of optical to chips, which requires making chips, silicon completely differently when we're going to put, embed optical onto the edge of silicon. So it's not just pluggables, it's right on die silicon photonics. But there's no scale ecosystem of that yet, because that's a fundamental shift from the way we've done things before. And we're not even at that constraint yet. We're looking at, like, for anybody out there who follows Lumentum, a stock that has been on a ridiculous tear for basically the last, year, if not year and a half, simply because if their approach to this is right, very few other people, if any, can do what they're going to do in photonics. So we're not even at that scale yet. We're like just starting to get to, like, we're super early, but that itself is another right inflection point from copper to fiber. And we know we'll get there, but maybe we need some standards to exist. Maybe we need a whole full, bit of better interreliability. Maybe we don't. Maybe it just all stays vertical and that rack has to be from one vendor, right? And you can't, and you're built in anymore. But that shift is coming. It's not immediate, but the next 2 years we're going to see a lot more move to optical. And so that's another, I think, key inflection point that we're watching.
Yeah, I mean, I think what's going to take place in networking in general this year is going to be super, super interesting. I just think there is, this is a corner of the industry that I think for a long time wasn't closely watched by people outside of it. And we're going to see so many interesting things take place there. Just one is just the scale of the build that's taking place, to Ben's point. But also just in terms of the transition, we're going to start seeing things that people have talked about for a long time, but are just now becoming real. Like co-packaged optics and silicon photonics and all those things, which have been lingering out there forever, like a long time. And now they're really starting to get deployed. I mean, Google obviously has this all
Yeah.
optical OCS
Yeah.
network that's super, super fascinating from an engineering standpoint. And now we have Broadcom and NVIDIA and Celestial AI, not Celestial, IR Labs coming out with their co-packaged optics, I think, in next year. Those things are starting to get built out, and it's from an engineering standpoint, or from a technologist standpoint, it's awesome. It's very, very
Yeah,
fascinating.
agreed.
Um, and that's fun to watch. And I think that the business case there is pretty compelling. Like, we just need ever more high speed optics. There's big demand for it inside the data center. It's a big addition to sort of the market there. And what's actually fascinating to me is that, like, as much as this optical stuff is sort of super interesting, let's not forget, like, we're going to see historic levels of growth and historic spending on optical data center switching systems the next 2-3 years. The world's still going to be 99 or 95%
Yeah,
copper,
right.
right? But there's incredible things happening on the copper side as well, right? We have Credo coming out with these active electric cables. It's a big deal. But there's lots of talk about people finding even more interesting ways to push copper beyond where it is today. And so I find that's a really fun dynamic to watch, where yes, optical is a big trend and it's going to be important, but, like, that's just sort of it seems to be challenging the copper engineers to, like, come up with new cool things. And so I like that too, right? Go analog.
Yes. All right. That's your new shirt, dude. Go analog. Um, I mean, I think you're right. I mean, I think that there's always been the, let's use copper as long as we can. To the same degree, they're always like, let's just use Ethernet as long as we can, because obviously, well, prior to the copper crunch, price always came up like, oh, it's just cheaper. Like, I don't know, at some point. But the reality is there's standards. Interoperability exists. There's a way to do this, right? That's a little bit harder. Again, you look at Google's TPU implementation and it's entirely custom. To some degree, so is NVIDIA's, right? So there really isn't and that's why I say, like maybe there won't be. Maybe these rack designs from vendors going forward will be so optimized and custom tuned that they just go to, IER, or they go to Lumentum, or they go to Coherent, and wherever, and these are spec'd in. Like, these are not just buy anybody's old cables or buy anybody's old optical transceivers. Like, I mean, that's a scenario I could see happening because of the tight system optimization. So, but that point of interoperability and standards and whatnot is one of the things I've always heard could hurt, right, the growth, right, scale of optical. But again, if vendors are going more vertical across the board, both themselves and or as a merchant, like AMD and NVIDIA are, like, maybe that doesn't matter as much, right? So that'll be interesting to watch.
Can we poll the audience? Is there a way to poll the audience? I don't think we have that functionality, but I guarantee you, if you poll the audience and you say what's going to win, proprietary or Ethernet,
They're going to say
99%,
yes.
you can say Ethernet's going to win.
Agreed. But
right?
But again, I go back to the reason why, like, when you listen to Jensen talk and he goes, everything here is purpose built, optimized, and tuned for TCO or for maximum tokens per dollar per watt. Like, it's like an F1 car. I mean, I've heard this, like, analogy a lot from a lot of my friends in tech and those that run tech companies that sponsor F1. But it's like, that is a highly tuned engine, a highly tuned car, every element of it precisely designed with one goal in mind, and they're custom. Like, it is purpose built machine to win that race. So again, I don't know. Like, I'm a fan of specialization and customization. I get the benefits it brings versus open, but anyway, I leave it at that.
So that's a fair point, but I'm just gonna say, like, everything, you're absolutely right. For today's workloads, everything being optimized has given NVIDIA a clear advantage. And certain other, there's a clear advantage there to certain companies, not just NVIDIA, but, like, that specialization. But the workload is going to shift, and we don't know where it's going to shift to. And when it does, that's going to open up the doors to other implementations of networking. And my guess is, just because history has always been this way, there will be lots of different applications that will all look a little bit differently, and then we're going to need a more standardized approach to networking, and Ethernet will win again.
Okay.
That's my take.
Okay. All right.
And in my defense, like, we have Jensen. He doesn't really care if NVLink wins or if Ethernet wins, so long as he gets to sell his high margin networking stack, right? He has Ethernet X,
Spectrum
X, whatever, yeah. Spectrum X, right?
Ethernet X. Maybe let's just generalize it.
He's got Spectrum X, and, like, maybe it doesn't have the same gross margins exactly as InfiniBand and NVLink, but it's going to be pretty good, right? And so I don't think he cares. Like that's why they have Spectrum X, is because over the long term, that's gonna come out. But anyway, that's where
Yeah,
my
yeah.
money
I mean,
is.
it depends which it gets his networking business to 100 billion annually. Is it, I need to own that whole stack come in, or am I happy to sell? Because he 100% wants that networking business to be 70 to 100 bill a year, and there is a path to it. So anyway, I know that's anyway. We'll leave that debate for another time. Okay. I mean, we're 44-ish minutes in. I think, Paul, you had either some primary
Yeah,
questions coming we can get to, and I think there's some in the chat too.
absolutely. Yeah, we've had a lot of questions from people that were asked beforehand. So, let me ask a couple of these questions completely randomly. I'm actually going to take one that just came over the chat right now. So, if you had to identify the three most important forces that are going to shape the structure of AI compute demand over the next 3 years, what is that going to be? And what are the three most critical challenge that the ecosystem is going to have to overcome?
Yeah, I mean, just top of mind, the first one's going to be this move to inference, right? So long context, that is the singular factor for memory. Again, you look at what and the challenge there is going to be, we're at a memory constraint and shortage, and that's coming out. In fact, I did these economics the other day in a memory report we published where, we see a path to memory costing actually 60 to 65% of server BOM costs, and which is it was usually in the 20s to 30s depending on where you are, but the shift to memory really as a function of scale up for inference, because of long context and tokens is, and that's before we get to crazy stuff like generative AI for video and audio, which again, right, this is just to do agentic. Memory is going to be insane, coding, like all these things. Then you add, let's just assume hundreds of billions of people. I don't know if I like this world, but hundreds of billions of people are making their own AI videos in real time. I mean, that I can't even begin. Like we haven't even fathomed what that's going to do to the compute ecosystem. But yeah, the shift to inference is going to be a massive constraint on compute. And again, that's going to demand a lot of volume of semis, obviously a lot of fiber, the power changes, like I said, and then again, this memory and storage one. It feels like there's no end in sight, given what we're seeing and their inability to ramp up new greenfield clean room anytime soon. So yeah, I would say that's kind of top of mind, at least for me in this question.
The second law of thermodynamics, we're entering into a high entropy world, where there's going to be lots of. I think what's going to happen is we're going to have a lot of experimentation. I think we will have some dead ends here, but the big driving force is going to be discovery of workloads and what actually is AI useful for beyond coding. And I think we're starting to see glimmers of that with OpenClaw. I fully admit to being completely Claude Code pilled now. Um, Early stages of AI psychosis. It is very useful. It's still a little raw, but you can see from what things like OpenClaw do, where we actually have useful digital assistants that do things that not just the people here want to do around coding, but also just sort of normal people who have never, been in an IDE in their lives. Today, AI is not useful for them, but it very soon will be. And I think generative video is going to be part of that. But I think uh, an actually useful assistant that actually can have some level of understanding of what you do is really, really important. And I think a lot of that will get played out on devices that we're overlooking today, like the PC and the phone. This is going to be a terrible year for both those categories, but I think
Over
next year,
time.
maybe the year after,
Yeah.
depending how long it takes. It's going to take for assistance for agents to get really useful. It's probably another 6 to 9 months of productizing it, and then it's going to be a year of lawyers wrangling. Um, so, but call it next year, 20 or maybe 2028, we're going to start to see like consumers actually making purchase decisions based on the AI specs of a device, of an end device.
Uh,
It's funny when you look at the current buying behavior. Let's take the smartphone market. Phones that advertise AI as a as the leading feature, they tend to sell the best. But if you actually look at the consumer data, people aren't buying phones specifically for AI, for a specific
Okay.
purpose. They know they want it, but they don't know what they want it for. They don't know how
Right.
they're going to use it, but they know that they need it.
Yeah.
Yeah, I mean, correlation is not causation in those things. The leading
Exactly.
phones are having the phones that have the most AI capacity in them are the high end phones that are doing
Mhm.
very well in this market, and I think that's a much more important factor. People want to buy nice phones.
Yeah.
Um, they don't care about the AI.
Yeah, and I think like just again this point speaks to sort of what one of the challenges too for the ecosystem, which is also a topic we were going to hit on, so they can use this to cover it. Is people have to monetize this, like
Mhm.
regardless, right? Even if you create value at the edge, software players have to monetize this. We have to monetize infrastructure. Like all of this obviously either gets slowed to a halt or whatnot if your hyperscalers and your open ais and anthropics cannot continue to make money on this. So I think the monetization side, which is obviously the biggest angst with a lot of investors, right? When you look at the complaint around, particularly Microsoft and Amazon, Google's a little bit different because of their business model. But people are like, we don't really love how much money you're spending unless you can prove to us you're making money on that. So the monetization of these tokens and software, needs to happen. There's positive signs. I mean, the scale in which Anthropic has grown is unprecedented. We've never seen an enterprise, specific company scale this fast before. But does that continue into next year and then the year after? Like that, so that I think is still the eye concern. Can the ecosystem, is what's happening in semis going to really meaningfully monetize itself?
I think buried in there is actually a sign of change already. In that, 18 months ago, if one of the large hyperscalers had said, "Oh, we're cutting capex," their stock would have gotten punished pretty strongly. Um, Now we're in a world where investors are asking those questions about how well are you doing with your AI investment, right? And we saw that with last quarter with Microsoft. Numbers were okay, but not great, and they raised capex by a little bit, and they got punished. Meta had very strong numbers, which may or may not be related to AI. They raised their capex by a lot more. Stock went up. So investors are starting to be right. A year ago, they would have said you have to invest in AI. Now they're asking, are you investing the right way in AI? The very next question is, why are you investing in this AI stuff? Um, that's coming soon, unless we see some incredible major breakthroughs in the next,
Right. And
6 to
and I and I
whatever
do
time
think
period.
to Jay's point, right? The consistent pivot in their earnings conversation is right, which is really a point directed to the street, is that they're emphasizing like we have a way to justify and believe that our spend is justified. So like they're trying to get people to realize this is not random throw money at the wall. This is a disciplined spend based on economics that they see, obviously both at build capacity, build new data centers, et cetera. So again, whether or not that's true, I would imagine these are smart people and they know their models. But the reality is, this is the new way in which they're trying to say, like, we have a format, and as long as the boxes that we see are being ticked, we believe we can keep spending.
Yeah.
Got another question for you.
Okay.
This is perhaps a little more controversial, but answer it as you may. So, question from the audience: with consistently changing import and export rules, sovereign AI, and a number of other things, there's a feeling within the semiconductor industry that it may be evolving into a two-lane supply chain, one for China and one for the rest of the world. Your reaction to that? Do you see that coming? And obviously, there's some issues. Talk me through your thoughts on that.
Say again, Jay.
I was going to say, 怎么回事啊? That's what my response is. Like, how is that possible? Like, I get the sentiment. There are clearly geopolitical tensions between the two countries, but I struggle to understand how either country survives economically without the other one at this point. Our supply chains are so intertwined. Yeah, it could happen. It would be very, very painful on both sides. I don't think I don't think either side wants it to the extent that some politicians on either side want to say. I certainly see. I see the, as much as there is an awareness in corporate America that we need to de-risk our supply chains and become less than 100% reliant on manufacturing in China, the actual moves in that direction are very, very slow. Um, I've seen a number of chip companies expand capacity in China this last year. Uh, I see Chinese companies moving heavily to Thailand and Malaysia. It's the same company, it's the same product, uh, but it's just, same owners, but it's just in a different geography. I don't see us fully decoupling. I don't think we should. I think I just don't see it happening. I think it's too
I,
complicated.
I agree. I mean, I think, when we've looked at, sort of China, it's interesting. Like I phrased this, many years ago in a report I wrote that the Great Wall of China is also to tech, and that they really don't want sort of a lot of outside. I think the challenge that they have is exactly, to Jay's point, which is their businesses would struggle to sustain if all they're selling to is the Chinese market, which I get is gigantic, right? Infrastructure for 1.3 billion people plus consumer devices and whatnot. Fine, like that's a great market, but again, at the scale in which you need their product and services to still be available to the rest of the world, even if that's not the United States. Like you need to be in Europe, right? You look at their smartphone companies; it's the same thing. They can't like they expand geographies as good as they're doing in their own markets, like Huawei and Oppo and Vivo and et cetera, also need to be in Europe and India and other markets where they need that scale because again their margins are bad. So these are things where I think it's really hard, but the way in which they've been set themselves up for is very unfriendly, right, to others coming in, which makes it very hard, I think, for them to get outside of their walls as well.
I mean, I think this is there. As much as I was making fun of tariffs before, I think there are legitimate trade concerns in the way in which China, in particular, structures its economy. It is directly or indirectly subsidizing its exporters, right? There's statistics that show. I mean, the exports are clearly the driver of the Chinese economy, which in a lot of other ways is struggling. And I spent a lot of time with looking at Chinese semiconductor companies. And I mentioned before they have this massive overcapacity, or there's a massive amount of capacity in trailing edge semiconductors, which nobody really needs right now in that quantity. But we see that in EVs as well. There's a massive price war going on in China for EVs. And so for a lot of these companies, their only path is to export EVs to other countries. And that's why you go to Mexico or Peru or Kazakhstan, you see Chinese EVs everywhere. Um, but we're starting to see the limits of that, right? They're not in the US and probably won't get here. European countries are starting to look very unfavorably about this too, for
Mm-hmm.
a variety of reasons. I think there are limits to how much China can export. And so I don't think most people in China really want a full decoupling. Um, they want to have access to the US market as much as we want access to their market and their manufacturing.
Yeah.
All right. Last question. Get out your crystal balls. Um, where do you expect to see M&A dollars being spent, and what surprises could the industry be in for?
Mm.
I
Whew.
saw your eyes go big there, Jay.
Yeah, I mean, so it's interesting, right? I think when one of the earliest episodes we did was just talking about, the consolidation that had happened in the semiconductor industry, which I
Mhm.
would say was largely driven by what's sort of lovingly called, right, the dark decade for semis. If everyone remembers, right, there was a time where it was like, we're all right. Smartphones are settled. Like, where's the growth areas? Almost 10 years where it was great, but it really wasn't the hottest segment in the world, right? Like it is right now, and it was consolidating. Right, you had a lot of big acquisitions, and the top five semiconductors were just companies were just getting bigger, right, via that consolidation. Um, I'm not sure what can really happen going forward policy wise because I do think acquisitions become harder, right? And that consolidation probably doesn't happen anymore. Um, Outside of maybe smaller kind of fringe supports to the ecosystem. But my concern there is just the, I mean, obviously, right? The Nvidia Grok deal was a acquisition only by because they probably wouldn't have gotten an actual acquisition cross, and that was not a big company. So yes, things like that can still happen. It's a small company, maybe not scaling, can do this acquihire-ish type thing. But I think it's going to be really hard, at least at a chip level, chip startup level, to continue to see any kind of acquisition stuff there.
So a couple ways to answer this question. Sort of following on what Ben was saying is the regulatory environment has been a big question. I think last year and the year before, I would talk to investment bankers, M&A bankers, who would say they've never been so busy, but they're not announcing any deals. And people didn't want to announce deals in 2023 because they didn't know if they could get it past China antitrust. They didn't want to announce deals in 24 because they couldn't get it past US antitrust. There's lots of questions about like what was the regulatory environment. Something I think has that switch has flipped in the last couple months. The US government, I think, is now very open to M&A, with the FTC sort of largely neutered. And for the moment, China and the US seem to want to get along with each other. And so there is a window here where deals can get a regulatory approval in China. At least they won't be blocked by for geopolitical reasons. But I think there is this thing to remember is back in 2000, early 2000, 2002, 2003, when I got into the industry, there were 2000-ish semiconductor companies in the US. Today, there's probably like 200 plus another 100 startups. So we've already seen this massive wave of consolidation. I don't know that there are many mega deals left to happen. Um, there are a couple large companies, which I'm not going to name, who probably could do some M&A and will get it with or without, whether they want it or not. Um, but for the most part, the big deals are done. I think what we're going to see in the next year or so is consolidation among the privates. There are, by my last count, 70 something AI accelerator startups. That's a large number and will probably shrink through acquisition and attrition. I think we'll see something similar in the neo cloud space. There's like way too many of them, and we'll see some consolidation there. But I do think there is. I mean, the good news of all of this is that for anyone working at a sort of early stage startup in the chip space, I think there's a lot of interest in acquisitions among the large buyers right now, and it's a good time. There is demand. Anything touching AI is going to be looked at fondly because there's so much demand out there. There's so much need to find efficiencies, to find better ways to do things, to shave 10% off of your supply chain costs, whatever the case is. There's a lot of yeah. I think startups will have some good. I think we should have some good exits in the next year.
Yeah. Yeah, it will be interesting. All right. Well, we're at our time. We appreciate everybody who participated live for your questions and engagement, and obviously all of our listeners in general. We hope that this was great, and we'll talk to you next time.
Thank you, everybody.